At IMGC, you are enabling home ownerships through mortgage guarantees. How does this model exactly work, and why do you think it is significant for a market like India?
If you have a good credit score, your loan is guaranteed. Or if you are new to credit or if you don't have a credit score, you will never get a loan. While underwriting, it's a parameter of collateral, the profile, the capacity, as well as your bureau score or the credit score. Please don't believe that only a good score will get you a loan. Don't utilize more than 30% of your credit card. There is a concept called loan to value ratio, which is governed by RBI. Definitely, age is not deterring any home loan ownership now.
I'm surprised to hear that people not filing income tax returns are still eligible for home loans.
So start working on your credit history as early as possible. Be very smart with your money usage. Be very smart, be very judicious with your money, whatever you have in your hand. Don't purchase home for the Instagram. Start small, start smart. Your first home can never be your forever home. Start loving these tools, EMI calculators, amortization schedules. Be aware what is happening in the market, what is going around. There's a concept called RERA now. People should be aware about if they are going for a builder flats. Don't chase promotions, chase the depth. Always learn two languages. One is people, second is business.
Ladies and gentlemen, welcome to yet another episode of the Sunny Shah Show. If you want to leverage India's mortgage and India's real estate market, you must not miss out this episode because I am sitting with a veteran, a renowned leader in his space, one of the most respected voices in India's lending and mortgage industry. I'm talking about none other than Mr. Anuj Sharma, the COO of IMGC. Anuj, thank you so much for joining me on this show.
Thank you, Sunny. I'm quite overwhelmed with this kind of introduction. So it's a great pleasure to be here. Thank you for inviting me.
My pleasure, my pleasure. So let's just dive in, shall we?
Sure.
Anuj, to begin with, I would like to know what enticed you into this journey of finance and lending industry. Can you tell us more about, let us introduce yourself in a much better way for our audience sake. How did you start? Where are you? What are you doing right now? And what inspired you to get into this industry?
Well, my journey, I never planned to get into mortgages or finance landscape. Being a MBA finance graduate, I was trying my luck and I was sitting for the campus interviews. One of the companies reached, they did my interview. I got selected, but I ranked lower and I got placed in the waiting list. And I was trying my luck with other companies that, whosoever will give me a chance, I'll do whatever they will give me. So as the fate would have it, this one of this bank who interviewed me earlier and put me on the waiting list, one of the candidate moved out, and as a replacement, I came in. So that's how I joined the corporate world, and it happened to be the first. My first job happened to be in the home loans industry. I was hired as a home loans officer. Initially, for 2-3 months, I didn't like it because I was only processing the hard copies of the papers, files, looking at the balance sheets, and this was 18 years back. And at that point of time, we had still not talked about artificial intelligence or doing system based processing. It was only hardcore paper, so I was not enjoying it really. But again, the fate intervened, and my leaders thought that he would be best used if we put him in the actually in the ground, so that he can go and meet the clients. He should understand their why do they need a home loan and how they are planning to buy their properties.
Right.
So that's how I got into this, and I started in meeting people. I started understanding their business. I started understanding their aspirations, and that point of time, it started clicking me that this is really a good work, and really started enjoying it because I was meeting so many people, looking at so many businesses, learning so many things. Started learning and started seeing how people plan their homes, because home, as still date, it is a very aspirational asset for a normal Indian. We are still very way beyond the world average.
Yeah.
In terms of GDP per versus the home ownership. We're still at 12%. It's way lower than the developing countries as well. So that's how the journey started, and over the years, as I moved much more deeper into the underwriting, then eventually moved to the leadership roles. Uh, I started obsessing over, then why can't we change the process? Why can't we do something which makes the experience for the customer a little better one. And that's and the whole culmination of underwriting, meeting targets, sales, doing all the kind of month ends, not going home for 3 days because you have to give the amount to the customers and the end users who will eventually go and register their properties. So while doing all these things moved on with after 15, 16 years, we started doing process changes. People started moving more towards the system-based processing. The borrowers become very, very literate in terms of what goes in the overall home loan process.
Sure.
They don't want to be suspended over 36,000 feet now. They want to be really involved in the process. So I have seen the whole journey from, started with all the files everywhere around me. Now we are, largely moved towards a paperless process. The turnaround times for a home loan processing has been cut down from months to days to now within hours. So the world has changed, the borrower has changed, the average home buyer age has changed. When I started, the average home buyer age was around 48 to 50 years. Now it is hovering around 34, 36 years. So it's a very exciting world to be in. A lot of learnings, but let's see how it goes and how the future's this industry future goes for this industry.
Very interesting. At IMGC, you are enabling home ownerships through mortgage guarantees. How does this model exactly work, and why do you think it is significant for a market like India?
So, sorry, IMGC stands for India Mortgage Guarantee Corporation. Now, we are kind of pioneering home ownership in India. We are the only company licensed by Reserve Bank of India to do this business in India. The essence is we provide mortgage guarantee to the lenders, to banks or the housing finance companies, only for housing loans, to mitigate their extra risk so that they go out in the market and fund or give home loans to the borrowers who are largely underserved,
Okay.
underbanked, unbanked, because India is still a very, very large informal economy. There's a concept called new NTC, which is new to credit. A lot of people have not taken any loan. A lot of people have not taken any home loan, to say. That doesn't mean that they're not good borrowers or they're not good, they don't have a good repayment capacity. So banks were always, or the HFCs, the housing finance companies, were always wary of going into this segment and lending, because so as a mitigant of that risk, we come in the picture. We say, you please go and lend. We will cover your risk. We will cover your first loss up to 20% if the borrower defaults. So if the borrower defaults, we start paying the EMI to the lender till that 20% amount is exhausted. So if at all the default continues and the property, it leads to a loss in terms of crystallization or settlement of a loan or auction of the property, we cover the first loss. So in a way, it acts as a very, very good risk mitigant for the profiles which don't fall under the credit evaluation pattern of the fixated policies of the bank. We enable that. Over the years, we have over the last 10 years, we have guaranteed around 36,000 crores of home loans, benefiting around 1.7 lakhs customers and spread across 400 plus cities in India.
Oh, yes.
And as a benefit, obviously the lender sees the benefit in terms of expanded markets, expanded customer base, expanded yields, definitely, because they are expanding, they are getting good yields. Otherwise, they would have been leaving this customer base. On the borrower side, we help in giving them better eligibilities, longer tenure, so that it is easier for them to repay the loans, and they don't have to go out in the market to arrange for their own equity financing, because we enhances the eligibility as a mortgage guarantor. So it's a win-win for both the parties, and of course we are enabling it, and we believe that with all the home loans what we have supported, we are creating jobs in the economy, because we are funding under construction properties also. Around 50,000 homes we have given home loans for the under construction properties, and we believe we are enabler for sustainability in the economy, as well as we are creating jobs.
Well, that's interesting. So you work with the finance corporations, of course. Do you also work with private banks, public banks? How does it work?
We have a tie-up with 20 plus lender partners now, which include banks, private banks, public sector banks, as well as housing finance companies. the regulatory guidelines says that we can guarantee only home loans. We can't guarantee any other loan form. So whosoever do a home loan, we are there to guarantee that.
You work with multiple lenders in India. In that capacity, when you look at an Indian buyer in the market, what are the common misconceptions that people carry, especially in India when it comes to borrowing?
There are many. There are many. I mean, basis my experience over the years, I've seen, when you work in certain industry, you get to know the know-how of that industry, and you know the nitty-gritties of that industry. And it's really surprising that today also people feel that, the kind of myths people associate with the home loan. For example, I'll list down 4 or 5 myths for you. That one is that if you have a good credit score, your loan is guaranteed. Or if you are new to credit, or if you don't have a credit score, you will never get a loan. That's the biggest myth, because even if you have a good credit score, there is no guarantee that you will get a home loan.
That's interesting. Can you tell me more about it?
Okay, yeah. So people say, believe that they have too many credit cards. If they utilize it more, if they pay it on time, they have a good credit score. They will definitely have a good credit score. There's no doubt about it. But there is also utilization rate. If you're using too much of credit cards, if you're inquiring too much, inquiring in the sense you are applying for credit cards or you're applying for personal loans, that impacts your scores in a negative way. Your score goes down. Even if your score is not going down, the kind of utilization you're doing, banks are, or the lenders are very, very critical of this fact that how much credit you are using in the market, okay, and how much you will leverage yourself, or if you over leverage yourself while taking this home loan. So, and it's, while underwriting, it's a parameter of the collateral, the profile, the capacity, as well as your bureau score or the credit score. So please don't believe that only a good score will get you a loan. There are a lot many other factors. Your scores may look good, but your inquiries may bring you down on that front. If you're inquiring too much, if you are using too much unsecured lending, that is also a negative impact on your score, or on the further borrowing.
So these are different levers where the right balance is important.
There are levers, yes. Ideally, the logic says, or the basic formula which people have formulated is that don't utilize more than 30% of your credit cards. Okay, your unsecured borrowing should be in balance with your secured borrowings. Apply for secured borrowings as well. Don't only look into, because if you go into only unsecured and credit cards, the lender will believe you as a credit hungry person.
Yeah.
Okay, and because then they will try to match it with your lifestyle also, or your income stream as well. The other myth is that a new to credit customer will never get a loan. With the advent of affordable housing, with the government changing in 2014, Pradhan Mantri Awas Yojana got launched.
Yeah.
Affordable housing became the new buzzword, and of course, there's a decent amount of success on the affordable housing front. Affordable housing, by name also, it means that you are reaching out to the people who has never owned a home. Okay, there would be a lot of people. This country is so large, many people who have never taken a loan. They will always be new to credit. So there are other ways of evaluating these people. It is not that they will not get home loans. They do get home loans. The other myth is people believe that the lenders funds 100% of the property value. There is a common folklore that if you are looking for a home loan, why don't you go and take a bank loan? पूरा पैसा दे देगा, you enjoy, आपको अपनी जेब से कुछ नहीं देना है. It's not that. There is a concept called loan to value ratio, which is governed by RBI. If you are a borrower up to 30 lakhs home loan amount, your loan to value ratio is 90%, which means for a 30 lakhs home, you'll get 27 lakhs from the bank, and rest 3 lakhs you have to cover from your own pocket. It's important to have your own equity in the loan. That's why RBI also insists that the customer should have their own equity, only then the seriousness will come to repay back that loan. If your loan is beyond 30 lakhs till 75 lakhs, your loan to value ratio would remain 80%.
Okay.
Because as you grow in the loan size, there is the logic says that your income is also better, that you can contribute more equity. So that's 80%. Beyond 75 lakhs, you have to restrict your LTV to 75%. So 25% of the amount you have to contribute on your own. So it's not that the banks will give you 100% funding on any property. The other myth is that young people don't get home loans. Okay, while age is definitely a factor, but it is not a deterrent. There have been lenders, and there's a change in the landscape now. Over the years, banks have started lending to people as late as 55 years old, and they're going beyond the retirement age. The tenure is going beyond the retirement age. If you have a good retirement corpus, banks do take care of that in the calculation part, and they accordingly they give you the tenures. It's not that you can't take a loan at 55 years of age. If you're self-employed, you can enter the loan at 55 years of age. You can take it up to 70 years, 75 years also. And if you're a salaried person, banks do go beyond, or the lenders do go beyond your retirement age, depending upon if there is a second generation on the loan structure along with you, or your retirement corpus, the things. But definitely, age is not deterring any home loan ownership now. The third misconception is that if you have taken a home loan, your title or your legal of your property is very clear. You need not worry about it. While banks do their due diligence on the legal part, but as a customer, it is very, very important for you to have a clear cut legal aspect or legal check on your property, because there are a lot many frauds happening with so many so much of competition on the home loan side, so many people trying to act as brokers. It is important that you take informed calls yourself. You should not only bank upon the lenders that they will be doing the legal checks and then you're safe. You should have your own checks and balances in place before entering into any home loan transaction. The other myth is, people believe that if a self-employed person will not get a home loan. As I said, that there is a lot of informality in the economy in terms of the income. People don't file income tax returns.
Yeah.
They still believe that they will not get a home loan. Again, it's a myth. The lenders have become competitive. They know how to assess your informal income. They know how to assess your behavioral aspects in terms of your repayments of your utility bills, or how much stock you're keeping, or in which school your kids goes. These are all the parameters they use for underwriting. So please don't believe that, if you're a self-employed person and if you're not filing enough income tax returns or not filing any income tax returns, you'll not get a home loan. You will still get a home loans.
I'm smiling because some of the misconceptions that you just mentioned are actually my misconceptions. So I'm surprised to hear that people not filing income tax returns are still eligible for home loans. Obviously, there will be circumstantial.
There's a lot of so the credit process is a bit long there, but yes, they do get home loans.
I'm even surprised that younger professionals can end up getting home loans. You also surprised me on the aspect of people think that they get 100% loan, which I don't think was the case. That's interesting. And so to that aspect, let us go to an important population. India has the largest youth population in the world, and most of the young professionals struggle to be homeowners. You being a veteran in the lending industry, what are the practical steps that you would want to guide these individuals so they are able to successfully borrow and realize the dream of becoming a homeowner?
Okay, a very, very relevant question, especially in these times when, as you rightly said, that the youth population is huge. We have a great potential in terms of the youth population, and as I told you a few minutes back, that the average homeowner age is dropping. Okay, and so it is very, very important for the people who will soon be joining the workforce, who will always aspire to own their own homes. Okay, and what all they can take care of before deciding upon that this is the right transaction for them. Okay, step number one would be that you should start working on your credit scores as early as possible.
And how do we do that?
Okay, so as I explained it a few minutes back, that if you're using a credit card, make sure that you don't utilize the limit too much. Remain in the threshold of 30-35%. Use that, because if you remain in 30-35% threshold, that will also help you in using your finances or using your money judicially. Okay, banks do take care of that.
So let's to simplify this for
Yeah.
our viewers, right? Let's say I have 2 credit cards
Yes.
and my total credit limit adding up to 2 lakh rupees. You are saying that I should at any given time not be surpassing or stay within the 30-35% of my total limit,
Yes.
which in this case, in this example, would be around 70,000 rupees.
70,000 rupees. Yes.
So that's an easy practical step.
That's an easy practical scenario, unless and until you have a really pressing scenario wherein you have to spend the money.
Right.
Okay, but normally you should remain within 70-75K limit. Okay, because if you're entering in the workforce, okay, I still believe you have got 2 lakh rupees worth with limit worth of credit cards. You must be earning in the range of 50-55K or 60K. For a person who is earning 55-60,000, I mean, I don't think using beyond 70,000 a month is a logical equation for that person.
It's also a sound financial advice.
Advice, yes. Okay, so start working on your credit history as early as possible. Be very smart with your money usage. Be very smart with your unsecured usage, unsecured loans, personal loans. People tend to take personal loans. When you enter the workforce, you have a lot of aspirations. You want to do this also, you want to do that also, and you end up eating up a lot of unsecured loans, a lot of credit cards, and at times I have seen people, they enjoy having a lot of credit cards. Okay, so don't get into that trap. Be very smart, be very judicious with your money, whatever you have in your hand. Second point I would say is start saving early. As I told you about the LTV concept, the loan to value concept, that you have to save 10%, 20% to 25% as the case may be. But this is not the only cost. The home has, when you're buying a home, there are a lot of hidden costs. There is a stamp duty cost, there is a renovation cost, there's a home improvement cost, or there may be a decor cost. Okay, so please take care of those costs as well in your mind and start saving early. You should not be struggling to contribute your own equity when you're buying a home loan. And one very interesting fact, let me just tell you, right, moving on to my other points. Whatever budget you will fix for a home loan, your home will never come in that budget.
You always go for
You will
more.
always go up. So
Yeah.
it's important that you consider more on the second step also, that you start saving early. It's very, very
So
important.
have a corpus build.
Have a corpus build. Third is, don't overstretch yourself. I understand home loan is an aspiration, it's a dream, but don't overstretch. It's, if you have an auto loan, if you have a personal loan, kindly try to close that as early as possible before jumping into a home loan. Home is a dream. You can't stay in that place with a lot of stress in your mind of paying the EMIs. It's better that you take a calculated risk. Okay. Don't purchase home for the Instagram. If you want to purchase it, absolutely no issues. Start small, start smart. Your first home can never be your forever home. It's better to start small, build some equity, move on to a bigger thing. So take a stepwise approach. Third is, be very, very conscious about the properties you are choosing. It is a very, very long-term investment. It is not a very short-term investment. You need to be very aware about the locality, the pricing, the future of the locality, how it's going to pan out, the future of your, because once you enter the workforce, maybe whatever life stage you are at, eventually the family will grow. Will that area suffice for you? You want to move to a different area? Keep all those things, all those points in mind before committing to a home. Third is, again, the linking to the last point, it's a long-term commitment. Make sure your finances, you have a mindset that you will be reaching at that X level of income in next 5 years, 10 years, 15 years, and accordingly eventually you plan your finances. If you keep these things in mind, and yeah, one more important point is, start loving these tools, EMI calculators, amortization schedules. Be aware what is happening in the market, what is going around. How do you, there's a concept called RERA now. People should be aware about if they are going for a builder flats. If your property is RERA certified, go and invest in those properties. Don't go without RERA, because that's a regulatory intervention and your money would be safe, your property will get completed on time. So all these small things, be attached to the market, know what is happening in the market, and just that. I would say all the best for a home buying experience, but please make sure that you take care of these points before getting into any transaction.
For a first time homeowner or for a first time borrower trying to get a loan for his or her property, there are a lot of options in the market today. So if I don't know these jargons very well, if I don't know these concepts, you look at fixed price versus floating rates, you look at the tenure that you should be taking these loans from, the institutes itself giving the loans, right? Private banks versus public lenders versus housing and finance corporations. There is so much to think, and we are in a market of aggressive selling where all of these banks and lenders are trying to sell these uh, loans to a consumer. What would be your advice? Can you tell us a little bit more about the options that we have and how we ensure that we are taking the right step, whether it be picking the right tenure for the loan, picking the right lender, at the same time, which option between floating and fixed rate? So give us more idea around this, please.
Well, I would say that it's the personal judgment you have to evolve. But yes, I can provide the guidance. But eventually, a person gets influenced by the friends, family members, their experiences.
Sort of word of mouth.
Yeah, word of mouth. But before entering, so you should know the pros and cons of both these things. One is the fixed versus floating. There's a lot of debate which goes around. While fixed rates are fixed rates, they give you a fixed repayment schedules that you have to pay X amount every month, and that remains fixed. But over the years, the fix has also not remained fixed. After 2 or 3 years, that also changes.
Right.
Okay. But you know what is the commitment you have to provide for every month. So that is, in that sense, it's very helpful. But fixed rates are quite expensive. They are not linked to the market rate, so that's why they are expensive, because the lenders also feel that if we have to freeze our return on a loan, because everyone has to earn a yield. If we fix our yield on a particular loan, then let's fix it on a higher side, because that will remain fixed for the tenure, the entire duration of the loan, or for 3-4 years. Normally, a home loan gets over within 7 years. That's the statistics I'm telling you. A person may get transferred to some other bank or the lending institution, or may foreclose it. So the lenders are take a cognizance of this fact, and they keep a fixed rates very high. Obviously, it helps you in fixed repayments. It will give you no tensions at all
No shockers.
When the rates moves up and down,
Yep.
as we have seen in the last 4-5 years, especially post COVID. Floating rates, understand the market first. As I said during my last comment, that you should be aware what is happening in the market.
Yes.
Or you start making yourself aware 6 months before or 7 months before you're entering into a home loan transaction. Know the market, where it's going. Do you think that the markets are going up? Reach out to your friends, reach out to your relatives. A lot of people, people know a lot of information available on the web where the interest rates are going, and then plan your move.
You made a very good point there, and I wanted to just bring a real case example, and you can tell me if I'm making sense, right? So we are in 2025. I can pretty much see that the repo rate I have stabilized to a larger extent. Inflation is under control right now. I'm talking about India as a market, and obviously we have global reflections to look and judge from. Is this a fair judgment call that if I were to buy a home in 2025, I would rather pick a floating rate of interest, because the chances of the RBI reducing the repo rate and eventually getting a knock-on effect on reduction in the interest rates of going down are higher in a current market scenario. Is that what you're referring to by saying judgment?
Yes.
Okay.
You're very right, and to the point that, in fact, last monetary policy committee, RBI has slashed the rate.
Has slashed, correct.
Okay, and the home loan rates are very low these days.
Right.
So I've seen the time when, so before this cut came in, there was one more cut, and before that there was no cut at all for
long time.
They maintained the status quo for 3 years or 3.5 years.
Yeah.
So, but people were in the floating rate, and they did pay the higher EMIs also. But this is the prime example of understanding the market and how geopolitical or the economical behavior is changing and how it will impact you. Let me also tell you a very important point here is that even if you're on a floating rate of interest and tomorrow your rate of interest, let's say, increases, your EMI will not suddenly go up. Your monthly outlay may remain same. the lenders will play with the tenure.
Okay.
They will increase the tenure. So eventually you will end up giving more interest. Okay, because you're paying it for the longer term. So it will hurt you there. But there are other options. You pre-close the loan, you start prepaying it, make some small part payments, and eventually you can manage those things. But again, it is, Sunny, the point is that it is on people, on a person to person, what to choose, a fixed rate or a floating rate. It's completely up to that person's point of view. Similarly, longer tenures or shorter tenures. My advice would be you choose the shortest tenure possible as per your financial capacity.
Makes sense.
So as per my financial capacity, my shortest tenure could be 25 years. As per your financial capacity, your shortest tenure could be 10 years. So banks do offer loans up to 30 years. Okay. If you are taking a loan of 25 years, you may feel that your monthly outgo will be less, which will be less, of course, but you'll end up paying more interest. Okay. Just to give you a ballpark example, if you are taking a, let's say, 50 lakhs loan for 10 years at 8% rate of interest, I'm just giving you the ballpark calculations. Your EMI would be 67,000, and the 10 years you will end up paying around 70 lakhs total.
Okay.
If you take this same loan for 25 years, you'll end up paying 1 crore plus.
Wow.
Imagine the differential in the interest rates.
Nobody teaches us this, do
So it's a huge difference. So if you want to act smart and play smart in this field, take a longer tenure loan. It's okay. I mean, if the income doesn't allow a person, take a longer tenure loan, pay smaller EMIs. But as and when you get small payments or a bonus amount or any other extra income from anywhere, if you're a self-employed person, start repaying small. It will impact your interest rates to a large extent. You will eventually realize that your tenure has, after paying those small EMIs also, your tenure has come down to 10 years or 8 years also. So it's all about smart moves.
Makes sense.
Even if you pay 2 EMIs extra in a year, your tenure will get impacted by 10 years.
Wow.
And 2 EMIs in a year is not much.
Yeah, you're looking at 14 EMIs in a calendar month of 12 months,
yeah,
which is doable.
It's also, it gives you a lot of impact, because that goes and gets directly adjusted to your principal. And being all these loans being reducing principal, the interest outgo also reduces. So coming back to our question, longer tenure, shorter tenure, it's completely up to an individual what to choose. My suggestion would be, and my personal view is, choose the shortest tenure as per your financial capability. Shorter tenures for someone could be 5 years, for someone it is 25 years. Okay. The other part is which lender to choose. Okay. RBI is very, very strict, and we are very fortunate to have this kind of regulator who is very, very customer friendly also. Okay, because they are very clear that whatever charges you are taking, whatever fee you are taking, whatever interest rate you are charging, or whatever you are changing the interest rate, you have to inform to the customer. So all lenders have to perform that, because they are guided by and regulated by the regulator. Now it's a personal choice. You want to go to a public sector bank, you please go. It's no worries at all. Private banks, very good problems. Sometimes what happens is, if I belong to a very remote location and I want to, post-COVID especially, what happened that people moved to their hometowns.
Yeah.
And they started buying homes there, because with the advent of work from home concept, which largely came into India post-COVID only,
yeah.
people thought that why don't we move towards our homes and save on the higher rentals? Instead of paying the rentals, we will pay the EMIs. Okay. So not many lenders were ready to lend in those cities, tier 2, tier 3 cities. So HFCs brought in that balance, housing finance companies. They were ready. And then eventually the private banks also realized that we should expand our markets, otherwise we'll lose the competition or we'll lose that market pie. Then further public sector banks also realized it. So every lender is available. You choose what is your appetite. You choose from the fact that what are the processing fees you are giving. You also choose from the fact how urgent you need the money. There are lenders who are turning around the transaction within 2 days. There are lenders who take time. Okay. Mostly in Indian families, people get influenced by their families' banks. In the sense that what is the bank they have been using for ages, they tend to go towards that. So absolutely no harm. Just aware about the process. You really want it really fast. How better you want to involve in the process. If you want to get involved, go, if you want to completely go in a digitized way, there are different options available. If you want to hard copy way, giving the submission of papers and all,
Yeah.
the different option, but it's absolutely a personal choice. But every lender is regulated by the regulator. There's absolutely no way you will get cheated anywhere. Some may have a different, some may take higher risk, they may take a higher rate of interest. Some may not take a risk, they may not give you that high rate of interest. If I'm a self-employed person and if I have a lot of informal income, in the sense I'm not filing the income tax returns, maybe the banks are not the right choice for me. Maybe the home finance companies are.
Right.
If I'm a salaried person, I'm earning and getting bank transfers in terms of the salary, the banks, HFCs, public sector banks, everything is open
Understood.
for me. So it's all about the personal choice. But please be aware what is happening in the market and then take your call.
It's very, very interesting. Thank you for this information, and hopefully some of our young aspirant homeowners can
Sure.
be homeowners now thanks to this
Yes.
advice. You briefly touched upon a point around affordability and don't buy house for Instagram. A great sentence there. We coined a term called house poor, where people have got into this vicious cycle of they purchased a house, probably beyond their affordability limits, and now they are in a stage where they are struggling with the 9 to 7 jobs, they are struggling to pay the EMIs, and that's overall ruined their financial cycle. That's a different conversation. House buying versus renting. That's a different conversation. I'm not touching that. But what would be the advice to people? I know you said look at affordability. I know you said that don't go beyond your financial capacity. But any simple advice that can really help me take an objective calculation that, let's say, for example, if I'm making X amount of money, I can possibly go to 3x or 4x or 5x. Any simple hack that you can guide us on?
Well, a simple hack, yes, I can give, and then it's up to the people to adapt to it. The simple hack is 30-30 rule.
30-30. What does it mean?
Yeah, so your monthly EMI payment should not cross 30% of your monthly income.
Okay.
And your home loan should not be more than 30 times of your monthly income.
Okay.
Okay. That's the rule. I mean, that's the rule, not a rule kind of a thing, but that's an advice if you can follow that.
So let us bring this, break this down.
Yeah.
Again, same example. I am making 1 lakh rupees a month. So you are saying my EMI should not exceed 33,000 rupees.
Yes.
And you are saying my home loan amount should not be in excess of 30 lakh rupees.
30 lakh rupees.
Is that
You're absolutely right?
Okay.
Yeah, it's absolutely right, because if you're earning 1 lakh rupees a month, you have to contribute 10% from your own pocket towards the loan. Then your family will increase. Then you have to really have to clear thought that how much my income will increase. Eventually, then you can plan your finances in a way that, let me stay in this home for 5 years, let me sell this off and move on to a bigger home. As I said in a few minutes back, that your first home cannot be a forever home. You start smart,
take steps,
small steps.
Right.
So 30-30 rule is one. Instagram, I've already touched upon that. Don't buy homes just for the sake of your friends are buying or they are in a different zone and you just want to feel relevant and want to buy that. Another important point is that if you're not able to buy a home loan, take a home loan, it's okay. Renting is not a failure. Have some patience, earn more money, then take a home loan. All kind of homes are available. All kind of value homes, value in the sense the money-wise value homes are available. It's all up to you what kind of budget you want to have take the home loan on. Third is, if you're too stressed, on the EMIs, and I meet so many people, Sunny, that, for example, salaried people, many people I meet, and they say that we are earning for the EMIs only. You get the salary, and the next day the salary is gone in the EMIs. That's called overstretching. That's called getting fixed in the bandwagon. We want to do that also, because aspirations are going up. Aspirations are going up, but the income levels are not going up. So going up in accordance to the aspiration. If you have aspiration, maybe you can work 4 times hard to get more income. Do something for because home is a very big emotional stability and emotional security also. If you are ending up paying overstretch EMIs, right, staying in that home, there is absolutely no overstretch. That emotional security is gone. So it's for your own mental health, for your financial health, for your physical health. It is important that please don't overstretch. Follow the simple rule. If you can't afford, don't afford. Nothing matters. It is okay. It is okay. The time will come when you will be able to afford that. If you can afford a 1 BHK, afford it. In the price of 1 BHK, with the mindset of affordability of 1 BHK, don't go for a 3 BHK. As I said few minutes back again, that you will choose a budget, but your property will always be beyond that. That's okay. That will always be there. The budget may include renovation, improvisation, home decor, everything. You may compromise on those things. But if you can afford a 1 BHK, please afford that. Please don't go beyond that. It's a long-term commitment. It jeopardizes the whole, every other goal of life, because your family is expanding, your kids will grow up, they will also need money, their education will need money, you will also need money for yourself. So I believe, and I personally follow that 30-30 rule, while I tend to digress to 40 also at times, but you should remain within that limit, 30-40%. And please don't you know uh, don't get into any social pressure that I want to buy a home because my relative has bought it or my friend has bought it. Complete You are the best judge of your affordability. No one else is coming and judging your affordability. There are lenders in the market who will still go ahead and give you the loan, but eventually don't come under any pressure of defaulting, because it's a vicious circle. You default, your bureau gets tainted, and then you will not be able to avail a home again in the future, avail a home loan in the future, or for that matter any other loan. So please be very cautious before getting into a home loan transaction. My whole idea is not to scare anyone, but my whole idea is to be smart and informed, take informed decisions.
What does financial freedom mean to you in the context of real estate as a wealth generator in a long-term scenario?
Okay, well, financial freedom means for me is that I am not too much stressing over paying my monthly commitments in terms of finances. And if not being ultra rich, at least I should have 2 or 3 assets which are working for me, which are giving me the income every month, even if I'm not working permanently.
Okay.
Okay, so that's the financial freedom for me. Now, as a real estate, in a country like India, real estate is a very, very important option in terms of a long-term financial health. How it helps you? It helps you in a lot many ways. First of all, there's a tangible appreciation. If you buy a property today, we have seen even in tier 2, tier 3 cities, there has been an appreciation of 8 to 10% in prices. Real estate will always give you passive income. Okay, if you're actively involved somewhere else, and by real estate here I don't mean only home loans or a home property or a housing property. It could be a commercial property also. So it always gives you a passive income, extra income, which is in terms of rentals. One very, very important point, and I will again touch base upon the LTV concept. If I'm taking a 30 lakhs loan, okay, and I'm contributing 3 lakhs from my own pocket, the loan is 27 lakhs. Now let's say I have stayed in that property for 10-15 years. Now after 10-15 years, the property worth is 50 lakhs. The loan will remain 27 lakhs, and according to, let's say, 10 years, I have paid off some amount, the loan is 15 lakhs. My equity in the property was 3 lakhs.
Yep.
50 lakhs it has become. So my equity has gone from 3 lakhs to 20 more lakhs. My equity has become 23 lakhs. Your equity is growing. You are getting a lot of leverage from your home. So that's the beauty of owning a real estate property. A real estate. Again, sense of security. Many people I meet today, they want to just leave their jobs. They want to do something of their own. They want to do startups. If you have your own home, you are not worried about any social security, in the sense that you don't have a house of your own. You don't worry about your rent payments, etc. It's an immense social security and a very good feeling to own a home, that I can take risks. in
It's
life.
an enabler in a
It's
way.
an enabler.
Yep.
You know, you can do something more in your life if you want to do on your career front. If you have at the back of your mind that my family is secure, they have a roof to stay. That's, you know, maybe I'm sounding it very, I'm taking it as a last point, but it is the most impactful point of owning a home. You're, you're always chin up if you own a home that, you know, I have a home. It's okay if my job doesn't remain, at least I have a place to stay.
Yeah.
I'll work something out. So that's what real estate gives you. Or I have a property, I learn from that. That's what real estate will give you. It's a definitely hedge against inflation. It grows with inflation. You know, you may not have come across that inflation is going up and the property prices are going down. The property prices also go up. So real estate is a very decent option provided you are committed to stay, provided you are not feeling that, you know, every 2 years you want to sell it off and do something else. It's a patience game. Stay invested, be patient, returns will always come.
I'll ask you a question of how to balance this investment. Let's say I want to build a corpus of 10 crores as an example over the next few years. What percentage of that should be in real estate?
You know, I'll be very biased. A 10 crore corpus, and there are a lot of many studies coming up these days. You invested in stocks, you invested in mutual funds, you invested in gold now. Gold is a new thing. Real estate, out of 10 crores, I would say I would invest. And again, this is my personal view. I would invest 70% of amount in the real estate.
70%
70%
for stability and
for stability. Because if I have 10 crore rupees, I will certainly have other avenues to take care of my day-to-day you know, expenses or year-to-year expenses. So this is a corpus I have, and I want to earn something out of this corpus in the future years, right? So I will not be touching this amount. If you want to keep on touching this, maybe you reduce this percentage to 50-50, 50% somewhere else and 50% in the real estate. But if you want to really earn something out of it, something decent, if you have a patience on your side and you want to stay invested, 70% is something which I'll invest it as part of my own corpus in the real estate. And in real estate, I will divide it among, you know, maybe land, commercial property, housing property, because you will try to, you know, invest in a earning assets.
yeah.
Commercial properties will always give you higher rentals. Land will give you a much better appreciation, much quick appreciation. And housing properties may not give you that kind of rentals. They remain in the range of 2.5% on the higher side. But yes, even eventually, if you want to invest in a bigger housing property and you eventually think that, you know, a few years down the line I'll move into this property, you may rent it out now. That's the option. But in my personal view, I will invest 70%, and that's 30%. I'll see that what do I do with that. But yes, a substantial portion of my corpus will go in real estate.
Are you following the same balance?
Yes, I'm following the same balance.
That's a disclaimer.
Yes.
No. This is very interesting. You, being a senior executive in your organization, you are in a business where risk is the centricity of everything, right? How do you draw balance? Obviously, every business needs to grow and everybody has ambitious goals. But in a volatile market situation and global turmoil that we are in right now, how do you balance this in your role at your work?
Well, these are the days you can't really say what will happen tomorrow. Okay, in terms of the geopolitical and, you know, what are the world is moving towards. So I would say risk. There was a time when risk used to be an exception.
Yeah.
Now risk has become a landscape. Okay. Now every day you are dealing with that. Some way or the other way you are dealing with some kind of risk. So I rely on 3 points. One is I rely too much on data. Everyone is talking about data. Everyone is talking about using data. In our organization, we are already started using data. Too much usage of data now, because data never lies. It's all about how you want to see it. For example, we introduced, we wanted to check on the delinquency, where the default rate will go, because when the default rate goes up, we have to eventually make a payout.
Yeah.
That's a money outflow from our side. So we eventually we use the data to evaluate how the behavior of the portfolio will change. Maybe we cannot control the uncertainty because basis the data, but we can certainly control when we are gonna hit by that uncertainty. Okay, so the data is something which we continuously use to avoid risk. We cannot avoid risk. I'm sorry for that, but to mitigate the risk. Okay. Second is there's a concept called intuition. Okay, there's a word and then there is concept. So intuition word everyone knows. Why I'm talking about the concept? Because of years of underwriting. I have developed, and most of my folks, I mean, whosoever is in the underwriting field, must have developed a gut feel or intuition. When the data is not helping you, when the circumstances are not helping you, your gut feel helps you.
Judgment.
And which comes from your experience, and I call it pattern memory. Okay, so you must have taken a particular call on a particular profile few years back.
Yeah.
And then basis your experience, you have seen that how that profile is performed. Maybe today you don't have the data, but you can still take the same call again. Basis your experience. So we do use that thing now as a risk mitigation. We use our gut feel a lot.
Mm-hmm.
Okay, and we don't get deflated or demotivated if any decision goes wrong, because that can go wrong anytime. Third is context. Context is very, very important because I spoke about data. Data was definitely showing us post-COVID, there's going to be default and it will be very high. But the context was the default is because of the issue of COVID. One black swan event, otherwise there was no issue. There was not a repayment behavior the customer was showing. There was not a capacity issue of the customer. The issue was that the businesses were shut down for so many days. They were just restarting it. So that was a temporary problem. The data was saying that the decision can go wrong, but the context was the decision will never go wrong because this is a temporary problem. So use data in this world to mitigate risk, because the world is changing really fast. Every day, every other day, new thing comes up. Okay, so everyone is talking about artificial intelligence, and artificial intelligence also now have a lot of dreams now. Proactive AI, agentic AI, and what all is coming out. So data is the key. Use data. Use your gut feel. Don't lose your gut feel basis. Just don't rely on data, but use some common sense and some gut feel as well. And context is very, very important. Data never lies, I said, but data may be giving you the directional effect, but why, what, and why it is giving that directional effect. So take those calls, and that's how you'll be able to mitigate those risks.
Being a veteran in your industry, 18 plus years of experience that you carry, any young professional trying to build his or her career in mortgage and financial services industry, what advice would you give them?
Very, very. The question is very close to my heart because I do a mentoring of a lot of people, and there's a concept called Gen Z now. Gen Z, millennials. I belong to a millennial generation, and I can so relate to these Gen Zs. But let me give you top 4 points, and which I talk about in all my workshops. One is, don't chase promotions, chase the depth. Okay, you should learn your art first. Linear promotions are very easy. Don't believe in linearity. Think differently, act differently. Do go deep and deep and deep inside your business, inside your stream. Know everything about it. Promotion will come. One. Second is, always learn 2 languages. One is people, second is business. People will never go out of equation. Whatever artificial intelligence, whatever technology will come in, people will always remain people. If I speak about from my perspective, from the home loan side, you cannot take out people from that. You're giving loans to people.
Yeah.
So you should learn 2 languages, business, again, going deeper into your business, and about people. Third is, don't seek permission to lead. Even the junior most member of your staff can lead. If you are willing to provide a solution, stand up and provide a solution. Fail, it's okay. Fail fast, learn fast, and deliver fast. Third is the fourth is, always be intuitive, even if you're tired. Always be curious. Lot many things happening. It is very, very overwhelming that you will not be able to know everything about. It is okay not to know about everything, but be curious. It's very important to be curious in these days. So I think four of these points, if you apply in your day-to-day progress, you will see definitely as a young person who is entering the industry, or as a young person who has just started the career. People get into a lot of pressure that promotion नहीं मिल रहा, promotion कैसे मिलेगा, मैं तो इतना काम कर रहा हूँ या कर रही हूँ. So इस trap में फंसना ही नहीं है आप लोगों को. Don't get into this trap. Keep on working hard. Eventually success will come.
Nice. The wise man's advice for all of us. Anuj, my final question to you. Next 5 years, where do you see the Indian mortgage industry going? And how can technology play a role in your industry?
Well, thank you. You asked that question, and that's a very pertinent point I would like to make here. That technology, we may not wait for next 5 years. Technology is something which we have already adopted. We means the industry has already adopted. People are using all sorts of technologies in the sense to analyze your properties, to analyze the legal reports of your properties, to analyze your profile, and they are trying their level best to go completely paperless on home loan process. Personal loans, car loans, auto loans, आपने सब देखा होगा, सब paperless हो गया है. Home loans was the last one to come in this role, but eventually this will also go completely paperless. The turnaround time, people now are talking. पहले क्या होता था, होम लोन को प्रोसेस करने में महीनों लगते थे. एक
Yep.
महीने में एक इंसान को लोन मिलता था, उसके बाद वो जाके प्रॉपर्टी खरीदता था. Now the home loans process is getting shorter and shorter. Now you get approvals within a day's time. The process and the push is towards making it minutes. Now there are a lot of factors involved for a home loan process to be completely technology oriented or completely straight pass. The bigger point is the collateral. जो आपकी प्रॉपर्टी है उसमें आपको सबसे ज़्यादा टाइम लगता है उसको आपको असेस करने में. वो इसलिए भी है क्योंकि हमारा अभी मतलब हमारी कंट्री में अभी पूरे रिकॉर्ड्स जो आपकी प्रॉपर्टी के रिकॉर्ड्स हैं वो डिजिटाइज नहीं है. सो एट टाइम्स लेंडर फील्स कि हम जाके उसको वेरीफाई करें, तो उसमें थोड़ा टाइम लगता है. वैल्यूएशन भी आपकी जाके होती है. प्रॉपर्टी पे कोई जाएगा, आपकी पिक्चर खींचेगा, वहाँ के आसपास से रेट्स पता करेगा और तब आपको वैल्यूएशन देगा. So people are trying to automate these things.
Sure.
Once these processes gets completely automated, the eligibility criteria, your processing criteria, everything will get then interlinked, and the entire process will be automated. So technology wise, already artificial intelligence solutions are being used in home loan processing. So already the tat is cut. I would believe that in next 5 years, if you think of a home loan today, maybe day after tomorrow you'll buy the property. That's the scenario, and that's the stage.
That's where we are getting.
And one other important point is there is a lot of digital push from our government also. The regulator, the government, everyone is pushing for digital push, and it's not about only home loans. But of course, home loans will not be behind that if there is an overall digital push. One is that. Second point is in the next 5 years, affordable housing will take the center plate. Because as the home loan penetration grows, the middle class will get into more home buying spree.
Yeah.
Their incomes are also increasing. Their capacity to afford, or the affordability which we call, is also increasing. So you will see a lot of growth on the affordable housing side. Third is, as I touched, based upon the technology push from the regulator. The regulators, for example, there's a new concept called Unified Lending Interface, ULI. The government is pushing that all the banks should share their data. All the bureau data is any which way shared. Whatever loans a bank is giving, this is already shared with the central bureau, which gives you the credit score. And all the banks will start sharing their data, their bank details. So if I want to give you a home loan, and before giving you a home loan, I want to check your bank statement. I just have to put somewhere in the ULI interface, it will reach your bank and your bank will give me the information, because I will tell them that you have approached me for a home loan. So if that gets, that's the future, and that's again a digital push which the government is doing. The other part is the sustainability impact. The fourth point is the sustainability impact, that a lot of stress is being given on viability part, the sustainability part, eco homes, or environmental friendly homes, the ESG part.
Yeah.
So even the lenders are promoting these buildings. You will see a lot of these buildings coming up, a lot of interest going on the ESG side from housing. There's a concept of bamboo housing in the Southeast Asian markets. Okay, that concept is not very far away from coming in India, which we build the bamboo housing, the multi-storied bamboo housing. The sustainable housing is gonna stay. Sustainable housing is something which the lenders will also start pushing slowly and steadily, because you know about the global warming and all these aspects. So sustainable housing के अलावा कोई option है नहीं, ठीक है? People are printing 3D houses, doing 3D printing of houses. In India, people are printing houses now.
Yeah.
Wherein you can go and stay. I mean, it's a whole. I mean, the world is completely different now. So you'll see many these kind of changes coming in, and the landscape will completely change. The person who is going to buy a property will completely get involved in the process. It's every stage they will know what is happening on their process and where their intervention is required. So I believe the next 5 years is going to be the golden era for the housing loans, specifically, because that's the need, and people are earning more, and it will eventually go into the housing and assets, real estate. Not the housing loans, I would say the real estate as an asset class overall.
Well, Anuj, I hope and pray that happens, and certainly any transformation that happens in your industry is going to eventually make people realize their number one dream in life, which is to be a homeowner.
Yes.
So with that being said, ladies and gentlemen, that was Anuj Sharma on our show today. I hope his insights, his expertise, and his honest, unfiltered inputs would help you make more sound and informed decisions pertaining to your mortgage, pertaining to your home loans, and pertaining to you realizing your dream of becoming a homeowner. Anuj, thank you so much for joining me on the show today.
Thank you, Sunny. Thank you very much. And it was a pleasure again. I mean, you gave me this option of speaking here. I'm more than happy to contribute more. If any of your user want to understand more about the home loans, I'm more than happy to help them. Thank you.
So for our viewers, Anuj's information will be in the description below. So if in case any of you want to reach out to him or his team, you will be able to do so by this medium. Please don't forget to subscribe to our channel so that we can bring more such insightful episodes to your doorstep. And thank you so much for watching. This is me signing off. Thank you.